Hey there, it's Mike Wise, CMG Home Loans with your weekly mortgage update. And this week it's going to be a little bit different. I'm going to give you a little bit of education on mortgage rates and where they're going. This past week, the Fed, they lowered the Fed funds rate, and mortgage rates, they actually jumped up a little bit. Not too much, but at the end of the day, I want to show you kind of the correlation between the Fed funds rate and mortgage rates, and why it might not be the best place to look. Because I got a lot of phone calls this week that people were wanting to refinance because they heard that the Fed funds rate down and mortgage rates went down. Well, that's not necessarily the case. So let me give you, I'm going to go to an article that goes over a couple of things here on the Fed funds rate, or on the mortgage borrowing cost. So this is why lower Fed funds rate won't instantly lower your borrowing costs here. So what I'm looking at here is a graph and the correlation, which I don't think there is one, between the Fed funds rate and mortgage rates. So these are the average mortgage rates here, and you can see they're very, very volatile. The Fed funds rate, while it's not very volatile, so you can see that there's certain points in time where they start to lower the Fed funds rate, mortgage rates actually go up. So you can do that at certain instances here and see that mortgage rates actually go up when they lower the Fed funds rate. So they lowered all these rates here, the rates actually went up, and then they started to fall down a little bit. Here's a good scenario from 2010 to 2015. The Fed funds rate stayed really super low, and mortgage rates actually went down. So there's not much correlation there with the Fed funds rate. Here's mortgage rates for the last 5 years or so. And where they've been, and you can see they are starting to go down over here, and that is good news that we're starting to see those drop there. But mostly what you're going to start to see is credit cards are going to start to go down, although 0.25% in the Fed funds rate is like maybe $1 a month on your payment on your credit cards. Remember, you're at 20 to 25% on your credit cards, so you're not going to see a huge benefit there. And car loans, the same thing. You haven't seen much benefit on your car loans at this point in time. They're basically hanging out on new cars right around 7%. You may see them go down just a slight amount there. Savings accounts, you're not going to see really any decrease there or increase. You're right around 1.75% to 2% on a 6-month or even a 1-year CD at this point in time. Probably not a good idea to put your money in there unless it's just sitting in there. If you have an all-in-one loan, it is beneficial to put it in the all-in-one loan, pay down your line, and pay way less interest. So at the end of the day, just wanted to kind of show you those couple of things there. But let me show you, this is the correlation between the Treasury, the yield on the Treasury, and mortgage rates. So you can see there is a very big correlation. They basically stay right on top of each other as far as the movement of the yield on the 10-year Treasury to the mortgage rate. So they move hand in hand here. This is the yield over here on this side and the rate, and then these are the mortgage rates over here on this side. But you can see how they move really hand in hand. So if you're going to look at anything, look at the 10-year yield on the Treasury yield there, and you have that correlation. Now, when you look at the yield on that, on a whatever weekly basis, monthly basis, or you watch that, there's a spread that we talk about in the mortgage world between the yield on the 10-year Treasury and mortgage rates. So right now, this is 2% right here. So this line right here that goes across is 2. So we're about 2.25% to 2.5%. Above the yield on the 10-year Treasury. So when you're looking at mortgage rates, that's about where mortgage rates are when you want to look at where they're going. So just wanted to give you that correlation, and let me show you where let's see here. So this is the yield today is at 4.177, and we've been down to the 4% level. So we hit this floor right here. We jumped up to kind of this ceiling, which was at 412 on the yield on the 10-year Treasury. And now we're actually hitting, well, let's see, live right now is 4.177. So we've trended up, and that's not a great sign for mortgage rates. Remember, the graph that I just showed you, the spread. So this 2.25% is kind of where those mortgage rates are. So let's go here. So if we go to 2.25 here, you're talking about 6.5 ish, 6.4, 6.5 is kind of where the mortgage rates are. So that's where we're landing, and that's how we're kind of looking at where mortgage rates are. So this week, there's been a lot going on as far as kind of interest rates are concerned, but wanted to give you that update. If you have any questions on it whatsoever, please feel free to reach out to me. Would love to help you. Enjoy your weekend. I will be available off and on this weekend. Text me if you need anything, and I'll get back to you as soon as possible. Have a good one, and we'll see you next week.